Hi, and welcome to the Market Alert for Monday, the 26th of June 2023. So, on Friday, crypto soars as VIX collapses, recession worries spark stocks, and worst week since March, according to the news on Friday. Risk off returns following weak PMIs, with equities downbeat, USD and bonds bid. So, the dollar up again. Stocks snap weekly gains, streak amid net negative global PMIs. And this was an interesting one as well. The national debt is a ticking time bomb. Always said that since 2011, but they keep kicking the can down the road, raising the debt ceilings, and continue to print. So there's always something the government needs to spend money on. And now it has a credit card with no limit, which is what I was talking about the other week. Remove the debt ceiling, and that's exactly what you've got. So anything to keep the illusion alive that everything is fine and dandy, we just keep printing. But of course, with higher interest rates means higher interest rate payments on the debt. Other news today, economic news. We've got German info, climate, and Lagarde is speaking. What have we got for the rest of the week as it's Monday? Let's have a quick look through. So we're teed up. We've got consumer confidence from the US. On Wednesday, Bailey speaking, Powell speaking, Lagarde speaking on Wednesday there at 2:30 p.m. Well, 4 p.m. for Lagarde. And Euro prelim on CPI on Thursday. And again, final GDP, unemployment claims final GDP index. But nothing major is there's core PCE index on Friday as well. So probably Wednesday. Most important day there, but also keep an eye on the news as well, because obviously there was an attempted coup according to the mainstream media, which I don't take any notice of, but you have to when you trade, because any sort of rumour that the war with Russia or Russia and Ukraine, I was going to say China then, must be something coming down the line. Again, any sort of attempted coup or mutiny is going to spark the market to the upside. So just be aware of potential shorts that could quite happily occur if they wanted to move the market to the upside. Now they have bots that actually roam around the internet for news as well and react to that as well, which is why you'll see, as we had a year ago when they first started the war with Russia, if you go back to the market alerts where we talked about Russia surrendering and peace talks and all that nonsense that we had at the time, the market would whip up 150 points in the DAX and the Dow in a matter of seconds just on these rumours, because there are bots now that go looking for the news that gets posted on the internet. So just be warned of this in the background there, that it could quite easily be used to move the markets back to the upside, particularly that we've got no major economic CPI, non-farm payrolls, etc. news for this week. Okay, let's get on and have a look at the markets, and we'll kick off with the Dow. So since I was last at my post, the Dow has moved down sharply there. You can see it's traded down to 78% off the highs. As we can see there, what was this high? The only thing that I haven't marked up, which I want to have a look at. So 34571 is the high of a week or so ago, week on Friday, and the market has moved lower since then, and also traded down, like I say, to that 78% and the 50 EMA. So I'm going to watch this if we get a bit of weakness coming in there today. 30-minute chart for Friday, the market trading up to the S1 in the morning, then shaking out, as can be seen there on Friday, but of course bringing the market back to the low of Thursday, and then the market sideways. This is Friday's low, which you can see there. At the moment we're above the DP, so that makes it fairly bullish. I say above, it's barely above. It's got to stay above the 20 bar moving average and the psychological level. If you get down to the close, that's usually a pretty good area of support. You get a bounce off it, but then there's always the potential to retest the low. On the upside, of course, when you're at the DP, there's also the chance that you will go back into the high, because you're generally equidistant between the high and the low of the previous day's trading session. So keep this in mind as well, depending on which way the market breaks. Also under pressure at the moment from the 50 EMA. And in the headlines, we saw about the VIX imploding. Well, here you can see that we've got the same with the implied volatility down to 10.64. And this is a low that we've not seen. I'm going to have to go out a lot further here just to show you. We've not seen this since 2019, 2020. So we're in an area where, again, we can expect a correction, a decent sized correction coming in this market as well. Like I say, it doesn't give you the date or time, but it alerts you to the fact that when it gets down into these levels, the volatility doesn't like it, and it likes to move back to the upside. And that's the same for the VIX as well. So be prepared for the potential of a correction in this market. It always turns up. It doesn't give you the date or time, as I say, but it allows you to be forewarned that if you are on the long side, take caution, because there is the prospect of a sharp decline to the downside. So just keep that in mind, and if we get any more lows in the implied volatility, then I will bring those to your attention too. So in the German DAX, it made a new all-time high as I was going on holes. You can see there, so we've got 16,427 is the new all-time high for the DAX. The market failed to hold, traded back below the previous one that we saw there, and has declined since. We traded down between the 78 and 89% retracement. We're below all of the averages at the moment, and we're actually oversold as well. So watch the 78, 15,802. We're also below the 16,000 psychological level as well. So again, watch out for the 89 and also the low here, which is Friday's low by the looks of things. Let me just put this in place so we can see what it is. The actual number is 15,731. So keep an eye on that, because if we break that, we're likely to test 89. And if we break this number, then we'll probably go down to a double bottom down at 15,626. So again, keep an eye on that. Also, this one in between, obviously it's there for a reason, without dragging the chart all the way over to the left. You can see last time it became an area where the market bounced. So again, keep an eye on these numbers here. They're very important on the downside. Of course, we could see the market move back to the upside as well, as it's oversold. So these would be the upside areas of fib numbers. But given that it's a long way away as far as the market's concerned, because we have actually dropped quite a bit, haven't we? Let's just have a look where we are up to Friday. We're down 696 points. So again, you'd expect the market to have a bit of a dead cat or some form of rally. The best way to do that is in a 30-minute chart or an hourly chart, so you can get an idea of where to measure back for the upside. But during Friday, we can see the market trading sideways there. Obviously, the kickoff there, market going down with the Dow down to the low of Thursday. Then the market finding buyers coming in, oversold, divergence, crossover, and then back up. Overnight, the market bouncing on this potential coup, but not holding at the moment. So just below the DP and the averages again. Needs to hold at the close. As I said when we looked at the Dow, the close is a very important level, and you can see there it's currently holding. Just going to reset this, and I'm going to draw in from here to here just to see where it ties in, and you'll see it's at the golden ratio at the close as well. Very important area there. Let me just expand this up a bit, just see where the market is at the moment. So potentially a bit of a bounce to the upside as well. These would be the target areas on the upside. I'm just going to remove this one so it's a bit clearer. So they're the potential upside targets for the German DAX. And like I say, on the downside, we're currently sitting at the 62 level there, which is the golden ratio. So an interesting area where we currently find ourselves at 62% and the close where we could see a bit of a bounce there. 5-minute chart overnight You can see there that we're moving down. We're just getting towards the close there. We've been dragging along the oversold conditions there. So again, wouldn't be surprised if we don't get a bit of a bounce at 7 a.m. when the market opens. Friday, there you can see that the open quite violent down to the low. What happens at the low in a bull market? You bring the market back if you can. It's oversold. We've got the volume and the market is brought back. Trade sideways. Then just before or just after lunch, you can see the market declined sharply there, but it's soon brought back in the afternoon when the Dow opens there as well, and then traded sideways. And on the news, like I say, overnight, so the market moved initially, but so far is having a bit of a pullback and trading down towards that close. But currently in the smaller time frames, we're seriously oversold. Are we in the 30-minute? Yeah, we're just coming down to that. So again, you could have a shakeout to begin with and then move the markets to the upside, particularly if we get more news coming out of Russia there. So despite being away last week, still managed to do a few trades before going out and about. 677 in profits. We've got 26.64 for the profit factor. 89 to 11 there win-loss ratio. A lot of the trades were just positional trades, putting them on, getting the stock to break even and clearing off for the day, and then leaving the market to either get to the profit target or taken off there. So it was it's a good way to trade. Keeps you away from the desk as well. Trade according to your style and personality, and also risk aversion, of course. So yeah, good week despite being away as well. Can't help it. It's after 30 years, if it's in you, it's in you. You'll always want to be a part of it. It's very difficult to leave, as it were, particularly if you're making consistent profits in the markets as well. Okay, let's move on and have a look at the S&P and the FTSE 100. So in the S&P 500, this also pulling back down to 38. 50% is at the 20-bar moving average there as well. Still below the 5-bar moving average, parabolic to the downside, but we are becoming oversold. So again, in an area where we could expect to bounce. How do we expect to see the bounce? Well, first thing is to close above the 5-bar moving average is the first indication that there's any potential strength coming back into the market, along with stopping volume that will appear. If that is to be the case, you'll see this a lot clearer in the 30-minute chart when you get to these areas, as can be seen here, where the buying came in here and here, so 2 attempts. And Friday, like I say, the market trading down to the close and low, and then doing a retracement and moving back up overnight. Below the DP at the moment, but holding at the 20-bar moving average. If we break the psychological level there, watch the close and watch the low as well. However, if we kick off from the open and there's more positive news, then on the upside you've got the R1, but there you've also got the 200 MA and Friday's high as well. In the FTSE 100, continuing to move lower, we've actually double bottomed here at 7443, which happened on Friday, and overnight you still see some weakness below the 200 MA, which is also very interesting. We came below it here and then being back to the upside. So again, very important area at that 7443. So watch that if you trade the FTSE, and also stopping at the 7862 area as the market moved up. But also at this point, you've got that 50 EMA as well. 30-minute chart, choppy for Friday. You see the market moving up, then back down, following the Dow, then back up, and then sideways. But say the moment down below the DP, 50 EMA as well, and below the 20 and the 5. So everything turning towards the downside. So again, watch support at the close, psychological level, and the low. And in the currencies, GBP, JPY. Let's go to the monthly chart. Continues to move to the upside. This is why I love monthly charts. You can see where the market's heading, 187.98. Continue to do this throughout all of last week, as we can see here. Moving to the upside, had a bit of a break, but still moving to the upside. Got back above the 5-bar moving average. First indication of momentum, which way it's going, which can be seen, and also some buying coming in there with demand by the big boys, moving the market to the upside. 30-minute very choppy for Friday, as a lot of markets were, but finding support at the 200 MA, becoming oversold, moving up to overbought, finding resistance at the close and an 89% retracement, back down to 62% retracement with demand and volume coming back in there, driving the market back up. Overnight, market choppy, but it's above the DP, and it's also tested Friday's high there as well, so it needs to get back above there in order to move higher. Meanwhile, in the pound, a bit of a choppy one for last week, which you can see. I notice interest rates went up on Thursday by 0.5%, not the quarter. So obviously the market reacting to this, which you can see there on Thursday, Friday, a bit of support coming in. You see the demand there, and it's also oversold. So attempting to move back to the upside, needs to close above the 5-bar moving average, and then you've got your targets back to the upside there. 30-minute charts. Let's just have a look at Thursday's reaction to the 0.5%, because I didn't see that. So yeah, pretty wild, wasn't it? It's a good 100-point swing on Thursday when they raised rates. And then Friday, you see the market trying to find its direction, oversold there with an 89. Crossover, moving back to the upside overnight, up about 70 points there towards Friday's high, but 200 MA in the way as well there. Down overnight, but up on Friday and Thursday of last week with the Bank of England raising rates, which you can see there, so a bit of weakness coming in there. This had a major impact on the metals. Surprise, surprise. Let's have a look at those. And kicking off with silver, as I said, the monkeys were going to get hammered, and certainly it was monkey hammered during last week, which you can see there, dropping sharply from nearly $24 down to, what's the low of Friday there? 22. So a $2, more or less a $2 swing for silver, which had a major impact on the gold-silver ratio, which you look at the moment. But overnight, market regaining there, which you can see some nice buying coming in. That's because they're going to hammer it later. Don't worry about that one. It's still hard to believe that this market is just under $23 when its all-time high is 50 in 1979 and 2011, and given everything else is up by hundreds of percentages, this market is 60% cheaper, plus give or take a few percentage points there than it was 40, 50 years ago. It's just staggering, but there you go. It's what you call real manipulation. Up on Friday, and like I say, following through there. Gold, not severe or as severe as the silver market shakeout on Wednesday, Thursday, Friday of last week, managing just to get back above that 1924 level, keeping it below the 2000 level. They're going to keep suppressing the metal prices because obviously the central banks are buying more gold than they've ever bought. And also it's in their interests to do so at the moment, because if gold price gets out of hand, it just shows a loss of control. So more of this to come until they bring in the CBDCs, I suspect. 30-minute gold, you can see being ramped up on Friday. They're trading up to Thursday's high and up overnight as well above the DP, which is the first indication of bullish or bearishness. And in this case, obviously a bit bullish there, given the dollar's down overnight. And finally, in the gold-silver ratio, you can see what I mean. Let me just remove the crosshairs. There on Friday, ramping it up to 86, absolutely crushing the price of silver against gold. But you can see that we're playing a bit of catch-up there at the moment. Silver accelerating a bit faster than gold on the overnight percentage-wise. Okay, that's it for this one. Bit of a long one, but a roundup of where we are after a week's absence. So let's see what happens. Keep in mind, like I say, the news at the moment with this Russia potential coup and mutiny, or how it's going to pan out following this over the weekend. Right, that's it. Have a great day. As ever, thanks for watching. See you in the next one.